Bitcoin did not do much over the weekend here. Still closed below the lower first standard deviation of the Bollinger Bands. I had the target of the lower second standard deviation. If that is lost on a daily close, that's this wick low over here at, basically 28,850 or so, 28.8 and under there. Closures below that lower second, which is now at around 28,750, would, indicate that Bitcoin's going to head back down to the wick low of this move at around, that 28,405 area, and possibly deeper down into that weekly support at 28K. As I've been saying, if that doesn't bounce, directly below there is the daily supports down here at that 27.5 to 27.250. And realistically, this is an opinion. We'll have to evaluate price when it gets there, but my next big area would be that 26, 750 to 27K, where this weekly is coming in below those dailies here. And it would just kind of make sense to go and tap the liquidity there. In my opinion, that is not technical analysis. Bitcoin is still in a tight trading range and has not yet completely broken down, right? So it's just kind of playing and going sideways. Incredibly boring price action. It gets exciting now. That this is the doldrums of a bear market transition when we get excited about a high in at 29,180 and a low in at 26,660. So we've got like an $800 range there, maybe, depending on your exchange. So it's even a little less than that, like a $700 range. When people are getting super excited about that kind of a move, that it's boring. And, instead of just talking about the downside here and making fun of people getting excited over very, very little price action, which myself included, by the way. So I am part of that camp. To the upside, we can see that the basis band is now a little bit below that overhead resistance here, coming in at 29,400. And, that area is 29,4 to 5. I do think that the close open structure here at around 29.7 to 28K is going to be a big one around that upper first, which is now coming in at 29,725. If it were to move up above there, it's got to get above this wick high, which is lining up with this upper second standard deviation around $30,000, slightly above, like 30 to 50 bucks. So that's still bearish as it stands right now. Bitcoin needs to recover on a daily and higher term time frame basis above this weekly overhead resistance coming in at 30,300. Take out these wick highs just above there at 30,400. Then I do think it's clear to go test the top side of the prior range above, and maybe even deeper up into the $31,800, $32,000 area, low 32s. And then we kind of reevaluate it from there, because as I've noted before, let's go to this chart here, get on the daily. We'll come back to the swing fail stuff a little bit later, as it's just playing in those areas that we spoke about last week on Wednesday and Friday. Let's get on the daily here. Let's switch over to RSI and do a little bit of calculating, because we can get some confluent levels with RSI. This is a fancy dancy RSI paid indicator. As many of you know, I've said many, many times, I'm a big fan of the developers over at Crown's Crypto Cave or app.crowntrading.net. You don't have to go and buy these. There's free versions of these. I just really like, supporting those guys over there. They do great work. I've also gotten permission to use code from some of these guys in my indicators. So, you don't have to follow my lead with that. I don't have any affiliation with them. I don't have any financial affiliation with them, I should say. There are free indicators that have little info boxes like this for RSI, but I like this one in that I'm used to it. And I'm used to reading it. So if Bitcoin were to head up, you can see that the bullish control zone is the teal zone up here. First, it'd have to get above the midline here, the 50% read, or the 50 read, I should say, of RSI. This is a Wilder's RSI, not Cutler's. So this would be 29,468. That's right in that overhead resistance. And the bullish control zone is coming in at 30,500. So, even getting up to 30,500, taking out some of these lower high areas, the last wick high was coming in at 30,350. So, getting above there would avoid bearish divergence from this area over here. But then we've got a higher RSI reads above that are likely going to populate some bearish divergence. So this is sitting at 66. So let's go ahead and see what that number would be if Bitcoin did bounce hard from here. We'll do the downside as well. We'll take a look at the bearish control zones and some possible areas for bullish divergence. But what did I say that was? 66? We'll say 66. So it would have to get above this high here. And yeah, we'll call it 66. So now that will update this number and let us know what the price would be. It would have to get above there, so it'd be 67. My apologies. Let's go ahead and do that, and we can get some confluent zones. So 67 for the bullish control zone would be above this last high here, which, by the way, this last high, I will call this out before we get to it, is the actual high at 31.8. So it would need to get above this area on price. It would need to break the high and get above here on RSI to avoid bearish divergence from here. But you can see there's higher reads on RSI above, but we'll take it one step at a time. This brings the bullish control zone to 31K. So it can get a lower high and throw another drive of, that would be a hidden bearish divergence drive. And I believe either way it's bearish divergence. So, because this would be 31.8, you get a lower high, higher high at RSI. And that would be, just another drive of bearish divergence. And we would have this all the way up to this high here, which is coming in at a 72. So it would need to get above a 73 while breaking the structure of the highs above us to not create bearish divergence. So we would go 73 and we can get the number for that, at least as it currently stands. And that would be, let's see, bullish control zone, that would be 32,164. So I do think that if Bitcoin were to choose the upside route, it's probably going to be capped in and around that 32 to 33 area, and it will create more bearish divergence. We would need to see some reaccumulation on the other side. There is an argument to be made if it does head up from here and regain the range above, that this would be a bit of reaccumulation, and then we're going to go push higher over time. I just, I'm of the opinion that it's going to create quite a bit of bearish divergence. Any reads below that 73 now. So I kind of went through and already did this, but I wanted to go through and show you the exercise that I do when evaluating this. I'll put this back to its prior area, and we can check out the downside here. So in order to regain this moving average, which is a 12 SMA, it's got to close above 29,140 or so. Bearish control zone is 28,739. Kind of already tested that in today's candle, I believe. Let's take a look at that wick here. That wick was coming in at that was 28,660 actually today. So we hit 28.6 today. So the bearish control zone has been tested. But if we did see that area closed in now, if we saw a closure around there, that would still be inside of the wick low down to that 28,473 as it currently stands. And the deep bearish control zone here, or the bear critical zone as it's noted in this particular indicator, is falling right at $26,000. And this is important to understand because $26,000 is basically the, well, it's not basically, it is a weekly support area. So $26,000 on the daily is the bear critical zone. That is still inside of the weekly lower second standard deviation, which is coming in just below there at 25,700 to 750 or so. And the weekly support is this close open structure here at around that $26,000. So we do have confluence if things were to absolutely fall apart to the downside in and around the local zone. Inside of this this bar here, this is our August 1st bar with that wick down to the 28,477, 470 area right at that daily support. So bearish control zone, even if we see closures inside down here, that would be right in and around the bearish control zone. If we dip a little bit past it, that would be confluent with around $28,000. So, we're seeing a lot of things kind of lining up now with overhead resistance and the zone below. It's just a matter of what the heck is Bitcoin going to do? So in this case, let's dig a little bit deeper with some momentum here. Momentum on the daily is going to remain turned to the downside, funny enough, below that moving average that we just talked about on the RSI at around that 29,169. Nice. So that would cross it back up. So closing candles below there would get continued downside of stochastic momentum. And this is a regular Stoch. This is not a Stoch RSI for anybody that might be new. This is a 6/3/14/255 look back. So 6K 3D 14 period look back. And it is a regular Stoch, not an RSI Stoch. So it's reading close over close price. And, it's fairly accurate at getting like pressure zones to the upside and downside. Since we last talked, we had the 2-day closure come in, and it's just kind of hanging out in the areas that we've talked about that it needed to turn in if it's going to turn, and that is in this case going to be 28 28,973, so 29K. It is currently turned to the upside here, just a slight beginning of what you would consider a signal. This signal will build a bit more and be a confirmed low above. You'll see most indicators confirm the low above 29,163. So again, we're coming into that daily area that we talked about on RSI, where that 12 simple moving average is. And this is where it needs to close to set this as a low. That is above the doji wick high here and the open of the bear candle before it on the 2-day here. And again, this thing's not out of the woods until it takes out $30,000, the $30,000 high of this larger doji of this smaller range down here. And of course, we've got that 28,477 low on that guy. So we're just kind of stuck inside this candle here. So technically, these are all inside bars, if you will. Now, they're not necessarily inside closing bars, but they are inside the wick of that 2-day candle there in this case. And, if it does set a low here, the target would be, right back to that 29.5 to around the 29.7 area. And then we can start targeting the closing lows up here at around 29.6 to 7. And then that 30K up top. If it could take that out, it's going to run that range up top and try that weekly that we just talked about a moment ago. Do we have anything big in terms of closures coming up here soon? So not today. So we've got Wednesday for the 2-day. Again, we have the 3-day closing today. And the 3-day, from a candle structure outlook, this is still presenting itself as downward pressure when just looking at the candles. Now it has put in a bit of a swing down here of this low side structure. If it can hold it up, basically around when you're looking at a chart like this on the 3-day, it's basically got to hold this wick low over here, or else it's going to test the actual wick lows that it keeps bouncing off of down here, and that's that daily support at 28.46, and in this case it's at 28.850. If we start seeing like 3-day closures, then it's wise to be looking at the next set of highs to the downside for the 3-day chart, which in this case is going to be this set of highs over here coming in at 27,700, and of course we've already been testing that wick high. Actually, no, this wick high, yes, I'm correct. Yeah, that's same wick high. It should be the same wick high at 28,473 there. So already testing the wick. Is it being front run a bit? I do believe it is. I'd be looking for that close around 28K and below, down into those areas just under there, where this close open structure is coming in to that 27,250 to 27.5 area. We have the 5-day is going to be closing with the Wednesday candle, still downside angled. Nothing new here. When taking a look at the bull bands for the 5-day, we've already tapped on the weekly, I'm sorry, on the 5-day basis rather, at 28,500 or so, getting under there. Got the 200 EMA coming in at 27.5, and then the lower first there at around 26,800. So that's our zone that I've been pointing out on the Bitcoin in 60 seconds video, kind of where that weekly support is at 26,750 to 27K. So keep that in mind. And when looking at the weekly, we have the same kind of outlook on the bands here that we've seen pretty consistently the past 2 weeks or so. So lower first is at 27,178. The 200 SMA is slightly above there at 27,337. And then the basis here has moved up slightly to around that 28.6 area. And this is going to be important on the weekly to watch. If it can take out this weekly doji wick high, likely going to go up. That's the upper first standard deviation there at 30,300. I'm sorry, $30,060 to then go test the 30,300 area, which is this high over here. And below, last week's wick low would also be below the basis band here. And then I would be targeting this lower side structure at the lower first and second in and around that, $26,000 or $27,000 to mid $27,000 area. And that would be on a closing basis. So just keep that in mind. And that's going to be it for Bitcoin right now.